If you just received an IRS letter that's referred to as the CP501, don't panic, but don't ignore it either. This notice is basically the IRS saying to you, you still owe us money and we haven't heard from you yet. In this video, I'll explain to you what the CP501 notice means, what happens next if you do nothing, and the best steps you can take right now to protect yourself and stop the problem from getting worse. Hi, I'm Bob Jablonski. I'm an enrolled agent and certified tax resolution specialist. I help taxpayers nationwide resolve IRS debt and avoid levies, liens, and garnishments. And I'm going to help you break down this IRS notice in plain English. So what is the CP501 notice? This IRS CP501 notice is what we refer to as a reminder notice. In most cases, what it means is you have a balance due from the IRS. We, the IRS, previously sent you a bill. Usually it would come in the form of a CP14, and the IRS is reminding you that that balance is still unpaid. It's not the most severe of all IRS notices by any means, but it is a warning sign that your account is moving deeper into collections. So why did you get a CP501? Taxpayers receive CP501 notices for a few common reasons. You owe taxes and you didn't pay the bill. You filed your return but couldn't afford to pay the balance. You made a partial payment on that account, but the balance is still outstanding. Penalties and interest increase the amount due. So you may have paid the taxes, but not the penalties and interest. So you still have a balance. And the IRS believes you owe based on their records. Sometimes the CP501 notice is accurate, sometimes it isn't. So the next step is to confirm what the IRS is billing is actually due. So what happens when you ignore the CP501? This is where people get into trouble. If you ignore a CP501, the IRS typically continues the notice cycle and the letters get more serious. So you started with the CP14, you moved on now to the CP501. Generally, you're going to get the CP503 next, which is more urgent. CP504 comes after that. It talks about the intent to levy, but only a state refund is actually able to be taken. And then finally, if you still do nothing, you're going to get the final notice of intent to levy, like an LT11 or letter 1058. And if you don't deal with it at that point, within 30 days, the IRS can start to levy you. They can start to do things like take your bank account balance, garnish your wages, or take other assets. So the CP501 is basically your chance to handle this before it escalates to this situation. Still have time, but it's starting to get serious. Here's what I recommend you doing first. Step one, confirm the balance is accurate. I've seen balances that are wrong because payments weren't credited correctly. Returns were filed, but the IRS processed them incorrectly. The IRS filed a substitute for return. In that case, it may be accurate from their perspective, but you can file a return that will override it that is actually correct. A CP 2000 adjustment increased the tax and you've never addressed it properly. Or it could just be the penalties and interest stacked up quickly and you're unaware of this higher balance. But don't assume the number is correct, confirm it. Quick tip, look at the tax year listed on the notice and match it to your records. Step two, choose the right next move. Once you confirm the balance is correct, you generally have a few options. Option one, you can pay the balance in full. If that's possible for you, pay it. That's great. It stops the issue immediately and it stops penalties and interest from accruing. Option two, set up an installment agreement. A payment plan is one of the most common solutions, especially if you can't pay in full the amount that's due today. Option three, request penalty relief if you qualify. Sometimes penalties are a big part of what you owe, and if you qualify to abate or reduce that penalty using one of the two options available, that may be able to decrease the amount you owe greatly. And then option four, if you truly can't pay, explore hardship options. These are things like currently not collectible status. The key is don't wait until the IRS forces the issue. Step three, make sure you avoid some of these common mistakes. Here are some mistakes we see to avoid when you receive a CP501. First of all, people ignore it because it doesn't look serious. Don't do that. Don't call the IRS without a plan and agree to a payment plan that you can't afford because you're just going to default and it's going to make it worse down the line. Don't set up a payment plan while you have missing tax returns. In reality, the IRS will not allow this. They need you to be in compliance, but you don't even want to make that call until you have all your returns filed. Fourth, continue to under withhold or not make estimated tax payments. Once again, you're just going to have a new problem. Your payment plan is going to go in default and you're going to be in a worse situation. Or thinking that the IRS is going to stop sending you letters on your own. That's not going to happen. These letters are automated for the most part, and they're going to continue to go to you. If you owe the IRS, the notices usually don't stop. They just escalate. So let's summarize this. The best move is to confirm the balance is correct, take action early, pay it in full, set up a payment plan or get help, and stay compliant so you don't fall further behind. The earlier you respond, the more options you generally have. If you receive the CP501 and you're not sure what your best option is, you can schedule a free consultation at Jablonski Tax Relief and talk to me personally by calling 972-821-1991 or by clicking the link in the description below. Like this video, subscribe for more IRS notice breakdowns, and comment below. Let me know what IRS notice you received and what year it's for, and I'll do my best to explain to you what it means.